Welcome back. It's me, Adam. You're watching Unlimited Options Investing. Right now it's about noon, and by the end of the trading day, we'll have a lot of a better idea of where this market may want to go. We're going to be taking a look at a ton of charts because they're telling us a whole lot of stuff. We're seeing a lot of indecision candles right at resistances, key resistance points that if we don't push through, we'll continue selling off. Apple leading the way, up 5% after reporting earnings yesterday. Can Apple hold up the market on its own? Probably not. It'll need help from its counterparts, Microsoft and other big tech. I know Google next week reports, as well as Meta Platforms, and I'm not sure if Amazon is. If it's not, then it probably will be the week after. And one chart I'm going to be taking a look at today is the 2-year Treasury note yield, and this one actually has been going up like crazy ever since the end of 2021, and today pulling back, whereas we're seeing a recovery in the NASDAQ. There could be a potential correlation between the two. Alright, and without further ado, if this is your first time on the channel, welcome aboard and hit that subscribe button. Here at Unlimited Options Investing, we talk everything from stocks, crypto, options, ETFs, and we're investing for the long term. As always, smash that like button and let's get started. Alright, starting off with the heat map of the S&P 500. So we clearly see Apple here up almost 6% at $168.39 per share. We have Microsoft up a respectable 1%, Nvidia up 1%, Google up 2%, Facebook up 1.5%, Amazon up 1.23%, and Tesla up 1.4%. Financials having a good day after Visa and MasterCard reported yesterday, with Visa up a whopping 8% on the day, MasterCard up 5.65%, and PayPal up 1.92% at $160 a share, a far cry from its 52-week high above $300. Software also having a strong day, whereas the rest of the S&P 500, the banks having a sideways day, as well as Berkshire. Healthcare all over, consumer defensive pretty much sideways, as well as industrials, as well as energy down with Chevron reporting. So when we take a look at the NASDAQ, it's up 1.6%, so it's up on the day. So what really matters is what happens really after 3 p.m. toward the close, when big Wall Street money enters the markets. And as we'll see in a moment with the charts, they could really decide where we could be going in the upcoming weeks. So toward the close, if we end up selling off, obviously that's not a good thing. However, if we're able to sustain these levels, dare I say even climb higher, that could be very encouraging for some kind of recovery. The SPY up 0.8%, and that making sense because as the Dow Jones is barely up on the day. So the most important candlestick chart right now, in my opinion, is the NASDAQ. So as we can see when we zoom in, we're right at that resistance. We're hitting right against this trend line that's been intact, that we keep finding selling pressure, and we keep finding supply flooding the market. But specifically, if we zoom out and take a look at the weekly, we see that we are making a doji candle, and it's really going to depend on the next couple of weeks what this market could be shaping up to look like. We are clearly seeing a doji candle where the open and the close, because as of this moment, remember, we haven't closed just yet. Like right now, there's barely even a body as we keep bouncing from green to red, and we see long wicks on either side of the candle body. And when we think of what the psychology of this means is that the bulls and the bears are really dueling it out. We can't decide whether we want to go up or we want to go down. It's an indecision candle. So depending on what happens at the end of the day, at the close, especially going into next week, if we're able to break through this downtrend, then where potentially we could go from there if we continue going higher like this. But really, it can go in any direction. Maybe it just flip-flops and makes a new channel and we start trading sideways over here. Or hey, maybe we don't even break this trend line, we bounce off it and then continue moving lower. And when we zoom out and we take a look at the amount of volume, we haven't reached this high ever since the crash of 2020. In my opinion, I think a big portion of this volume came when the Fed was talking on Wednesday. And when we take a look at the S&P 500, we have a similar kind of doji candle. The body is bigger. We're resting right above that 50 EMA. We see increased volume, not nearly as much though as the crash in 2020. And this one not going down nearly as much as the NASDAQ. We know because it's less risky, as it is more diversified, having companies like energy and financials, and big tech not having as big of a weighting. So the chart I really wanted to show everyone was the US government bonds 2-year yield. And we can see really ever since the end of September, when we were at 0.25%, we have just ripped on higher all the way up to about 1.2%. But when we take a look at the daily, we see that we've pulled back a little. So this could be explaining why we're seeing a short-term rally in risk on assets. And again, ever since the end of September, just bouncing off the moving averages, taking 3 steps up, 1 step back, 2 steps up, 1 step back, and then grinding up higher. And what we can do is if we take the NASDAQ and we also take this US 2-year, and you have a ratio between the two. So until we break this 20 EMA and this 50 EMA and then break maybe this 775, 800 level, the NASDAQ in relation to this 2-year yield bond is going to continue falling down. Likewise, if we take Bitcoin and we compare it to the US 2-year, we see a very similar chart again until you break the 20, the 50, and then you get above the 75,500 level. The 2-year is going to continue pushing against risk on assets. Taking a look at Tesla on the daily, we fell all the way to about 796, so we were below 800, but the stock price has recovered. We're now at 840, and we're sitting right on that support line. And we have had this trend line intact ever since June of 2020, and we have touched it 1, 2, 3, 4, 5, 6, 7 times, several times in the summer of 2021 before we ripped on higher in the fall. So in my opinion, and this is not financial advice, if this support does hold up, this could be an excellent buying opportunity. However, if it doesn't hold up and we break through it, then we could fall to 750, 700, you name it, maybe even below. Taking a look at the FANG index on the daily, so I had drawn this downtrend a few days ago, and it looks like we could potentially be breaking out of it. And this kind of makes sense because since the FANG index, again, we don't have Microsoft and we have Netflix instead, but just using this as a placeholder for the moment, because big tech makes up such a big portion of the S&P 500 and the NASDAQ, it would make sense that this index would be somewhat of a leading indicator if we are to break out of it and we see sustained buying pressure and sustained upward momentum. If not, then again, we keep falling. And lastly, talking about Bitcoin, we're a couple of weeks away until we meet the downward trend. It looks like, however, we're going to have a battle with the 20 EMA first. When we zoom in and take a look at the 4-hour time frame, we are pretty much in no man's land ever since the 20th of January. We've essentially been trading in this channel between, let's say, 32,500 and 37,000. All right, and that's the end of my video. Thank you very much for watching as always. So really, it just depends on what big money from Wall Street does at the end of the day before close, and really we'll see what kind of direction we may go into heading into next week. As always, subscribe, like. I'll see you in the next video.